Hey everyone, Mark Hendricks here for Weinberg Choi Residential. As we wrap up February, here's what we're seeing across Chicagoland's real estate market. Year over year, home values are up again broadly in the 4 to 8% range, depending on neighborhood and property type. And in many of our luxury north side markets, Lincoln Park, Lakeview, North Center, well finished homes have seen even stronger appreciation. But here's the key: Chicago is a city of neighborhoods. What's happening in Rogers Park is not the same as what's happening in Lincoln Park. What's happening with entry-level condos is not the same as what's happening with $2 million single-family homes. Real estate here is hyper-local, and the story is nuanced. Now, certainly something that will shape the rest of 2026 are mortgage rates. We're seeing rates move towards the lower end of where they were over the last couple of years. Many buyers are now locking in closer to the low 6% range, and in some cases, even in the high fives, depending on loan structure. Now, that may not sound dramatic, but psychologically and financially, it matters. For the last few years, we've had what many call the golden handcuffs. Homeowners sitting on that 2.5% or 3% mortgage simply were not motivated to move. We recently crossed an important inflection point. There are more homeowners now with mortgage rates at or above 6% than there are below 3%. That means fewer people are handcuffed to the ultra cheap debt. And gradually, not overnight, we should begin seeing more inventory come to the market. Let's talk buyers. If you're a buyer, here's the reality. More inventory is likely coming, but lower rates also bring more buyers off of the fence. So even as those listings increase, demand is likely to remain very, very strong, especially for move-in ready homes, updated properties in prime neighborhoods, single-family homes under key price thresholds, and luxury homes that are priced correctly. If rates continue to ease, even modestly this spring, competition will increase, and with that, price pressure continues upward. Waiting for a better market has historically not paid off for Chicago. Time in the market continues to outperform timing the market. If you are a seller, you did not miss the market. We remain in a supply-constrained environment, but this is not 2021. Buyers are more payment sensitive. They are more analytical, and they're comparing everything. The homes that are winning right now are priced correctly. They're prepared strategically, positioned to stand out. The gap between well-prepared homes and the aspirational pricing is widening. The right strategy can still create strong competition, particularly in the luxury north side markets where demand remains deep. A quick note on refinancing. If you purchased in the last few years and your mortgage rate is in the mid 6s to 7% range, it may be worth reviewing your loan. Even a modest improvement in rate could translate into meaningful monthly savings depending on your loan balance, your equity, your long-term plans. In some cases, homeowners may choose to access equity for renovations or improvements while keeping their payments manageable. The key word here is review. As rates, values, and personal circumstances change, your mortgage strategy should evolve with them. Now for my spring 2026 outlook. As we head into the spring market, here's my read. Inventory will rise gradually, buyer activity will increase as rates soften, prices will continue to trend upward, and strategy will matter more than ever. Chicago remains fundamentally strong. We are not in a boom. We are not in a downturn. We are in a competitive, opportunity-driven market. Whether you're considering buying, selling, refinancing, or simply planning ahead, this is a year where thoughtful strategy beats speculation. If you'd like a personal look at your neighborhood, your equity position, or what your next move should be, we are here for that conversation, because the right move isn't about headlines, it's about aligning with your goals. To put it another way, whether it's one story or two, it's your story that matters.